please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Counting down to the budget, and today was the day of the economic survey. Moderate growth revival, short-term fiscal slippage, stabilizing GST transition, and miles to go for gender equality. The economic survey for FY18 has been tabled in Parliament. The two volumes, running into more than 300 pages, is a lot slimmer than the last year's survey. But here are a look at the key highlights. Let's start with growth. Growth is on the revival path, but the pace will be moderate. GDP for this year, that's FY18, is pegged at 6.75%, slightly higher than the chief statistician's estimate of 6.5% for the next year. And that's more important. The survey expects GDP in the range of 7 to 7.5%. Now, the survey wastes no time in pointing out that rising crude oil prices remain a key risk to growth. It highlights the upcoming listing of Saudi Aramco, and that's the big one, and predicts that output cuts will be aggressive to ensure a good valuation for the oil giant. So watch out for oil prices. The survey is also hinting at a minor fiscal slippage. It says, and I quote, "A pause in general consolidation cannot be ruled out." However, it does expect states to meet their fiscal deficit goals this year, and that is thanks to the GST. Now, since the introduction of the GST, revenue growth in the share of taxes of states has risen by a whopping 25.2%. Compare this with a 12.6% gain for the central government and the 16.5% gain in overall taxes. So good news there coming in for states. The survey has also showed that GST has led to a 50% jump in the number of indirect taxpayers, and goes on to pitch for the revenue neutral rate to be kept between 15 to 16%, while revisiting the idea of a single rate of tax. That is unlikely over the next few years at least. But for the large street, the survey is laced with euphoria and caution. It points out that a large number of savers are starting to put their money into equities, but also warns that there is a threat of a correction. It's not just the threat of a correction in India, but globally as well. Investors and market watchers are pointing out to the possibility of a correction. The survey also lists out a 4-point agenda for the next year. It talks about stabilizing the GST regime, tackling or continuing to tackle the twin balance sheet issues, privatizing Air India, staving off macroeconomic threats. The survey says the twin engines of growth that propelled the Indian economy in the 2000s, that's exports and investments, continue to run below the takeoff speed. It also points to the deceleration in rural wages. And finally, the cover of the economic survey was pink and even had the hashtag #MeToo in the first page of a chapter highlighting gender disparity in India. It laid bare the ugly truth that parents in India continue to have children till they have the desired number of sons. The survey goes on to say, and I quote, "Indian society has miles to go before it can sleep in good conscience," end of quote. Here is the architect of the economic survey, the chief economic advisor, Arvind Subramanian.
We project nominal GDP growth this year for about 10.5%. Stock prices are at record levels, which means that there's expectations of, dynamism going forward. The number of GST taxpayers has increased by about 50%. We need to stabilize GST because export refunds, compliance, revenue will still have to be, achieve an equilibrium. Going forward next year, because of all these factors, we think that growth will rise to between 7 and 7.5. This year, oil prices went up. That affected consumption and the government finances, and that also held back real economic activity. We know that the sex ratio in India is highly skewed. If it's the last child, skewed towards males. If it's not the last child, more females.
Well, that is the chief economic advisor presenting the economic survey. The survey, remember, also serves as a precursor to the union budget, which shall be presented in less than 72 hours from now. Sapna Das joins us now. Sapna, give us a sense of what we can expect in the union budget on the back of the commentary from the economic survey. The survey is merely prescriptive. It doesn't necessarily link to what the budget is likely to do. But On the back of the commentary, the hints, what would your estimation be?
Well, very clearly, as you've also rightly pointed out, on the fiscal consolidation side, the survey is very clear. It talks about a pause. It also talks about FY19 being an election year, and it goes on to explain that it's better to have more credible targets and have a different glide path rather than have an ambitious fiscal roadmap and then the government is not able to meet that. So clearly for FY18, the revised estimates, the CA also indicated the higher borrowing will get reflected in the budget numbers when they come out in Feb 1. Very clear indication that 3.2% is unlikely this year. And similarly, on the same count, the finance minister had stated 3% for FY19. Probably it will not be 3%, it will be slightly over that. So, but that's more of a given in the sense that this has been an unusual year. It's been a year of transition. It's been a year of great structural reforms like demonetization and GST, and both seem to have stabilized. So that's on the positive side. So that's one. Second, very clearly, the surveys also said that the investment cycle is yet to pick up, which again clearly indicates that probably the pump priming by the government in terms of the expenditure side, especially the capex, especially on the social sector schemes, that's going to be on the higher side. We don't expect any slowdown in that in FY19. Obviously, the other obvious point is that it's an election year. So that's the second takeaway that, it's a second kind of a conclusion that we may come to as of now. The third, of course, is also in terms of the tax revenue numbers. The survey has been euphoric both on the direct tax base expansion as well as the GST tax base expansion. It's been totally euphoric on that. And, the CA has very clearly pointed out, in fact, for states, it's been a huge win-win situation. So it's very likely that the government is going to keep stiff and high, steep direct tax and indirect tax targets for FY19, especially keeping the GST buoyancy in mind, and which is what they're indicating, that December onwards, apparently the cycle has already turned. So that can be the second key number to watch out for. The fourth, he has very clearly spoken about the twin balance sheet problem. In that respect, he's spoken about the 4 R's. The fourth R is further reforms in the banking sector. He has said very clearly unviable banks need to be shut down. So we have to wait and watch and see what further announcement can come on the banking side in the budget, if at all the finance minister would like to speak on that. But clearly, PSBs may need more capital apart from the recap announcement that has happened in FY18 in FY19. So that is another key number to watch out for. Last but not the least, disinvestment. He has made Air India a top priority. In fact, in the last couple of 2 surveys also, the CA has spoken about that. So Air India is a huge test case for the government again in terms of strategic disinvestment for FY19, and that will also impact their divestment receipts targets. So probably the divestment receipts number are going to be on the higher side. Last but not the least, he's spoken very clearly about rationalization of GST rates, but of course that will be outside the union budget, totally at the council's end.
Absolutely. Sapna, appreciate you joining us to try and give us some sense of how the survey may link to the budget. Staying with that, we learned from sources the government is unlikely to reintroduce the inheritance tax on the 1st of February. Remember, earlier there was a buzz that the government could levy a tax on the value of assets passed on to legal heirs through inheritance. The tax, which would have applied only to families with a certain net worth, could have ranged between 5 and 10%, but now the government, we learn, feels the climate is not conducive for the reintroduction of the inheritance tax. It wants to weigh in on the socio-economic factors before arriving at a decision. Inheritance tax, also known as estate tax, was introduced in the year 1953 and was abolished by the Rajiv Gandhi government in 1985. Will they change their mind? We don't know, but this is the thinking at this point. It was the first day of the budget session of Parliament. To mark the new session, President Kovind addressed a joint sitting of both houses of Parliament. He said the government is committed to its promise of doubling farmer incomes by 2022. He lauded the government for the increase in the country's forex reserves. The president focused on minority upliftment and said the government believed in the need to empower and not in appeasement. He also stressed on the importance of hygiene and sanitation. He highlighted that under the Swachh Bharat sanitation coverage in the country had almost doubled in the last 3 years. President Kovind also touched on economic issues like the bad loan problem and said that the banking system needed to be strengthened and that transparency was the key to the government's policies. The parliament will now sit on the 1st of February when the finance minister presents the union budget. The session will see other key bills coming up as well. To name a few, the Triple Talaq Bill, the Menstruation Benefit Bill, the Wages Code Bill, the Motor Vehicles Amendment and the Electricity Amendment Bill.
मेरी सरकार की योजनाएं न केवल किसानों की चिंता कम कर रही हैं, बल्कि खेती पर होने वाले उनके खर्च को भी घटा रही हैं। मेरी सरकार किसानों की आय को 2022 तक दोगुना करने के लिए प्रतिबद्ध है। किसानों को उनकी पैदावार की उचित कीमत मिल सके, इसके लिए देश की कृषि मंडियों को ऑनलाइन जोड़ने का कार्य जारी है। इनाम पोर्टल पर अब तक 36,000 करोड़ रुपए से अधिक की कृषि वस्तुओं का व्यापार किया जा चुका है।
मैं आशा करता हूं और मैं देश के सभी राजनीतिक दलों को विनम्र आग्रह करता हूं कि इस सत्र में 3 तलाक, महिलाओं के, विशेष करके मुस्लिम महिलाओं के हक की रक्षा करने वाले इस निर्णय को हम सब पारित करें।
Well, the Prime Minister there at the start of the budget session. News just coming in. Lenders to Monnet Ispat have zeroed in on a buyer for the debt-ridden company. Banking sources tell us that a consortium between Aeon Capital and JSW Steel have emerged as winners. Ritu Singh joins us now with the details. Ritu, how much will this consortium be shelling out, and when is this deal likely to be finalized?
Shereen, the consortium that you mentioned, Aeon and JSW, has actually revised its offer from the previous offer made. Remember, we had reported that Aeon JSW had emerged as the sole bidder to acquire Monnet Ispat under the NCLT process, following which there were various discussions and deliberations between the two parties for a better deal for the bankers. And now, in the fresh deal, about 6% equity infusion is what the revision really is. So there's an additional 6% equity that the consortium of Aeon and JSW has offered to acquire Monnet Ispat. The entire deal is at about 3,700 crore rupees versus the liquidation value of Monnet Ispat, which was only 2,200 crore rupees. So it is a good offer for the banks. They're getting 2,700 crores in cash and about 1,000 crores as equity that will be awarded, which will therefore have an upside for the bankers as and when the company improves its fortunes. With this current proposal, banks will take about 60 to 65% haircut in the Monnet Ispat case, which has a debt of about 10,000 crore rupees to all its creditors, to a banker consortium that is headed by SBI. Remember, this sale includes the integrated steel plant with a 1.5 MTPA capacity, which will greatly add to JSW's ambitions in the eastern region, and therefore an important deal for both the parties involved.
All right, Ritu, appreciate you joining us there with the latest in the race for Monnet Ispat. Aeon JSW consortium are likely to emerge winners there. Time for a break, but coming up next, cow vigilantism in 3 states draws the wrath of the Supreme Court, sends a contempt notice to Haryana, Rajasthan and UP for failing to prevent incidents of violence. Details when we get back. A positive reading of the economic survey meant that the bulls on the large street continue their upward march. Both the Sensex and the Nifty gained more than 0.5%, and in the process, the Nifty managed to close above 11,100 for the first time ever. There was selective profit booking that was visible. The Nifty Bank and mid-caps underperformed, the latter closing almost 1% lower. On to earnings action for the day. India's largest mortgage lender, HDFC, hit a fresh 52-week high after the company posted a strong set of third-quarter numbers. The company's net profit jumped threefold to 5,600 crores. The company also reported an 11.2% jump in its net interest income, which was driven by strong growth in the individual loan segment. Revenue from operations came in 6.6% higher at 8,600 crores. The company's gross NPA stayed below 1.2%, while its net interest margin beat expectations, coming in at 3.86%. The Supreme Court has issued a contempt notice to 3 states, Haryana, UP and Rajasthan, for failing to comply with the Apex Court's order to take adequate steps to curb cow vigilantism. Ashmit joins us now with the details. Ashmit, take us through the details of the contempt plea.
Well, the cow vigilantism issue was back in focus today before the Apex Court on account of a fresh application being filed. Again, the petitioner was the same as the last time, Tushar Gandhi, a journalist. The question essentially being raised is that are guidelines that were issued by the Apex Court in terms of tackling cow vigilantism, are they being followed or not? That was a big question being raised. The contention of the applicant is that they're not being followed. A clear finger being pointed at 3 states, importantly, Rajasthan, Haryana, as well as the state of Uttar Pradesh. Now, what were the directions? What were the guidelines of the Apex Court? Well, they're twofold. In September of last year, the Supreme Court had issued directions to these states that they should, number one, constitute a task force that would look at the issue of cow vigilantism, that would tackle the problem of cow vigilantism, and that there should be a nodal officer for every district who would then be responsible for ensuring law and order, and that this cow vigilantism issue does not spread. This was followed by, of course, strict observations by the Apex Court that people should not be allowed to take law into their own hands. The contention now being raised essentially is that these directions essentially have not been complied with, that the instances of cow vigilantism are continuing unabated. On account of that, the Apex Court number 1 has agreed to hear the application, has taken cognizance of it, and also importantly issued a notice to these states and sought reply as to the compliance with that September 2017 order. So clearly the onus now resting on these 3 state governments to come good on those directions or to explain the reasons before the Apex Court. Back to you.
All right, Ashmit, thanks very much for joining us. That's a wrap on this edition of What's Hot. Thanks very much for watching. Bulls continue their upward march on the Lal Street. New highs for our markets. Markets today takes the action forward. We'll see you again in 30 minutes on India Business Hour.